Hello everyone and welcome to the monthly market overview. Today is November 2nd and we're going to review some charts and see what's going on in the markets this last month. Hopefully everybody's doing well, getting ready for some holidays. In the euro, you can see here on the monthly chart that there's not much change since last month. We are still in this tight correctional wave. It looks like the B wave still at this point with this recent behavior. We could simply see this market come up a bit, come back down, back and forth in throughout the mouth until we see that final C wave down. Most likely when we do see that final C wave down, it'll probably retrace in this previous area of the larger degree wave 4 in that large wave up. So again, we're still in the B wave, tight, very difficult to trade. When we go to the daily chart, that will explain why we're seeing markets go straight up, back down, up and down, up and down. With not a real big set of direction. Of course, this move since the bottom here in July has been nice, but we can see there have been some strong pullbacks since. On the top, we did not have a bearish divergent bar, which is unusual with such a huge turnaround, but this is one of those occasions, not the 15% of the time that it's not here. So this market did turn around quite quickly. We can see we've gone through the gator. So if you are a trader or you went short on this fractal here, let's see if we've hit that fractal price yet. I believe we're not quite there. So if you're one tick below, we haven't gotten in. Otherwise, if you're not trading on the daily chart, you may want to look at a smaller time frame. It will definitely reduce your risk and allow you to be a little more in tune. So here's a 240, a 4-hour chart, giving you an idea of what I'm talking about. You had a beautiful fractal entry here. We had another fractal entry over here that was executed, and this market has been continuing straight down. At this point, the alligator's wide open. The AO is still increasing. We have no divergence. Of course, there was a BDB at this point with huge angulation. We were talking about angulation being the distance from the green line to the high of a bearish divergent bar, and it'd be the opposite in a bullish divergent, or the bullish divergent here to the green line. So we're looking at the highs of these bars and the distance. So at this point from here to here, you can see the distance of the bullish divergent bar and the green line has quite a bit, like that rubber band effect. But the AO is still increasing down, so we haven't seen a correction yet. So that correction will probably occur. So many times when we see a bar like this, especially with such a fast move, we're looking at some profit taking. But as far as angulation goes, had you used that bar, right now it's still valid. If this bar comes down, the next bar comes out and takes out the low. Of course, it's no longer a valid BDB for reversal. You might want to use it as a stop to lock in some of this profit if you were in this move coming down. Next market we're going to take a look at is going to be the Canadian dollar. Now the Canadian, let's go up to a larger time frame real quick. You can see here as well, we are in a correction. Looks like, again, a B wave possibly. Otherwise, maybe the beginning of C, but it does have more of a B wave pattern to it than an impulsive wave. So this one's a little bit difficult to trade looking at the larger time frame, of course, below the gator here. So on the daily, we are obviously also below the gator, but you can see this has been a very difficult pattern. Straight down, up, straight down, up, back and forth. Now, the good news is along the way, most of the time there was bullish divergent bars, bearish divergent bar, bullish in here. We had a bearish here that didn't get hit, a strong bullish here with this had very good angulation. So if you notice the distance between the alligator down to the price bar, huge amount of distance, that had good angulation. So that was an excellent exit or possibly a stop and reverse if that was your trading style. We also see another one over here. I'm going to open up this chart. The distance between the green line and the low of that bearish divergent bar was quite significant. So again, good angulation. We also had it here. So at this point, of course, there was good angulation. You may have been stopped out. If you used 10 ticks below, you still would have been stopped out. Market continued up. But right now in Canadian, the only thing to do if you're following this would be go short at this point, and there is a buy up here. In between, there's a lot of distance. So if you're not trading a daily or you want to reduce your risk, again, go to a smaller time frame. I'm just going to the 240. It's one of choice, but a 120 or a 60 also works very well. And you can see that you could capture a good bit of this move with less risk that you would have had on the daily chart and be able to lock in some profit as well. Next market we're going to take a look at is going to be the yen. Now the yen has been a mess, still a mess. Huge correction down on the monthly chart, as you can see, looks like a C wave, but now we're currently in the 4 of the C. So we go to a weekly, down one time frame, And you can see clearly here we're in the correction. We had a very strong 1, 2, 3 peak on the AO in this point, and we're in 4. So we do still expect, according to the Elliott wave, another wave down at least below this point here at 96.40. Now we don't know how long that will take. There could be another move here of C up. In between, this looks like an A, a B, and we would expect to see a C. Remember, this is a weekly chart, so a larger time frame. This could take a bit of time to unfold on the daily. So when we go to the daily chart, you can see that this recent behavior has as well, that is a B wave. So if you're trying to catch this C wave up, you may want to use an outer fractal, not be caught, because if this continues to intertwine, this is a dangerous area. This is where most of the losses occur in the market, in this wave 4. So you do have some fractal cells a little further out to make sure you don't miss the next move, and you also have some fractal buys in here that would help you make sure that you don't miss that C wave up. But you want to use tight stops and make sure that your risk is in your parameters when you're getting in these trades in a correction. Next market we're going to take a look at is going to be crude. As any of you know, crude has been moving down. It's been a very choppy ride. This has been very difficult to trade on a large time frame basis. If we go up to the monthly chart, what I want to show you is this degree of correction happening here as well. In and out of the mouth. We've just gone back into the mouth. We're still above the blue line. So this has been difficult. If we go to an intraday chart, like a 240, you're going to see the same thing, the same pattern, swinging in and out, in and out, in and out. We did have a couple nice moves, corrections, and then moves again. So as you see, it's been difficult on the daily chart, though. If you've gone short here or here, either one of those has been a very nice move. If you went short at this point, you're still short now. Feeling very, very happy, I would assume. Market is telling you right now to continue to be short. Alligator's wide open. AO is red. We're starting to create some divergence now, but that doesn't mean that this can't continue. So follow your signals, use tight stops. But do remember, in these types of markets, don't be afraid to take your profit. You can always get back in if the market continues, but you don't like to see you allow profit to disappear because you've gotten greedy or other things. If you get signals and the market tells you to get out, take your profit, follow, and get back in if it's time. Next market we're going to take a look at is going to be gold, and we'll go back up to a monthly on that and get that out overview look here. So it looks like we are still in the correction, obviously. Nothing has changed, and in the 4 of the C wave, again, I believe. So we are in a 4, meaning it's going to be difficult. We go to the weekly. Same thing. We see that we're in the 4 of this C wave down. We do not have divergence on the AO yet. So once we see divergence and this market comes down and takes out that previous low of 1,179, we'll start to look for a possible turnaround. And that will also be about a 50% retracement, or a little more, of this entire move that we had up of the wave 3. So for gold right now, we go to the daily chart. You're going to see this is what we were looking at. This is the wave 4 of the larger time frame. So this looks like an A, possible B wave again here, and still going to probably see a C before we see that last leg down on the largest time frame. So gold has the possibility of an upward move before we see that big move down. Now long term, when we see that big move down finish or complete of the C on the monthly chart, that may be the time that we're going to start to see gold go back up, take out the highs of 1,800 and start to approach 2,000 and above. So again, we don't know how long this could take before the C wave continues. These patterns seem to go quite a long time. If you look at gold, we were in a 4th wave for over 20 years. So I don't think we're in a 20-year 4th wave, but I do believe that it could take a few more months before this wave pattern is complete. Silver's going to have the same outlook, except it has retraced more than 50%. We appear to be in the 4 of the C of the large degree correction, so we're expecting a possible another pop-up before that 5th wave down of the C to get rid of to create the divergence for us. Now what we're going to see on the daily time frame is going to be this difficult trading. Again, a B wave pattern. B waves are dangerous. So if you are trading silver, you want to be sure you're using very tight stops, that your risk, your entry point, that the risk is minimal, that you can get back in again for the next one, because this sideways action could go on for quite a bit. I do suggest maybe using outer fractals here if you're trading a daily chart, and if you're an intraday trader, definitely using a smaller time frame, and don't be afraid to take your profit off the table. Again, you can always get back in. Next market we're going to take a look at is going to be the soybeans. Soybeans has been a little bit kind of a rough ride here. If we look at a weekly chart, we can see that this has been a little bit choppy behavior in and out of the mouth. Alligator is open, but is correctional behavior. So on the daily, we've seen that all of these three fractals, or these last two current fractals, have been hit. So if you're trading beans, you're now short. AO is below zero. We do have some divergence here within this wave, starting at the top down. So I would pay attention to that. I'm not saying that this market can't continue down, but we do have divergence, so it's something to look out for. If this AO peak market continues down and gets this one is taller than the previous one here increases, then we know there's a lot more room in this move. However, beans do tend to turn around on divergent bars, so if I saw a strong divergent bar come in with angulation, which it would have angulation if it appeared down here now, I would be willing to put a stop above, maybe 5 or 10 ticks above, just to lock in some profit. Make sure there was no large retracement, because we also know about the grains is that they can turn around quite quickly when they're ready. Okay, let's see. One more market. Let's take a look at sugar. Haven't looked at sugar in a while. Now sugar, let's go to a monthly time frame and take a bigger picture. We had a large impulsive wave here, 3 of some sort. Looks like we had a very difficult ABC. And it's possible with the retracement and the way this looks that this is a bottom. If so, and this is a new wave up, it would be great trade location. Now, we don't know that for sure, but it's just a possibility. So this is the weekly showing that breakdown of the 5 waves down here and the divergence on the AO and the start of the new wave up. Now remember, if this is a wave up, you're going to have a wave 1, which will be impulsive, and a wave 2 could retrace almost 100% of the wave 1. So it doesn't necessarily mean it's not the beginning of a new wave up. This point here, which is on the weekly and the daily, this buy point would definitely be an interesting point if the market comes back to me. Of course, if it continues down, we're going to have to follow it as well, but it does have a high probability, or a bad case of probabilities, as my dad would like to say, that this market could continue up and starting a new wave sequence. Another market you're going to take a look at, haven't seen in a long time, is some of you I know like to trade cattle. So here's live cattle. What I want to point out is the wave pattern here. In and out, in and out, in and out. These self-similar repeating patterns. Self-similar repeating patterns are extremely important to notice, especially in the markets that you trade. It would just be like a personality of one of your children. You know, they each have a different personality. And so when you start to see these similar repeating patterns, it kind of gives you an idea of what you can expect next. So in these moves, you see this market comes up very quickly, pulls back down through the mouth, up through the mouth, back up through the mouth. So this would not be a great day trading chart with very large stops. This would be a market that you want to use a trailing stop, maybe a 2-bar trailing stop, and keep a pretty tight rein on it, not allow a big range here for you to stay in the market. So I believe that is all. Well, let's look at one more, natural gas. Natural gas is another interesting market. Can be very fun to trade. It also can be a little bit volatile. If we see what's been happening here on the monthly chart, let's get a bigger look. And you can see that we've been kind of in a flat correction. No matter what we know is that this alligator closed and tight is a B wave of some degree, and this market is correcting, making it more difficult to trade. So this is what we're seeing of that flatter market on the larger time frame. On a daily time frame is stretched out here, going up and down, up and down. If you're trading natural, you'd be short from one of these fractals, or if you're waiting for the bottom, you do have one more entry here. I suggest, again, with the type of market that we're trading and the pattern that this market has of moving down quickly and reversing, down quickly reversing, if you notice that there's a bearish divergent or bullish divergent bar almost every bottom point here, every one of these. So if you were to get another strong bullish divergent point or bar here, I would suggest putting a stop in at least 5 or 10 ticks above and covering your profit as well. So that's all for today. I hope that this has been helpful in the market overview. If any of you have questions, we're here to help. Again, getting prepared for the holidays. Wish everyone the best. May all that you wish for be the least that you receive. Namaste.